Is this housing price run up sustainable, or are we building up into a massive housing bubble that's all going to crash? I'm going to talk about definitive answers for you today. Hi, I'm Keith Weinhold. This is Get Rich Education. Let's get right into it. Let's look at the thing that people think about the most when they think about a housing bubble, and that is the median price of a house in the United States, the median sale price. And as we can see here, we are currently at the latest quarter ended at a median sales price of $374,900. This includes things like 20% year over year price increases on sale prices. And when we look back here to the peak of what was a housing bubble, the median was only about $257,000 there. So you compare that back here again to $374,900. What's about a 45% price run up in a period of 15 or 14 years there? All right, well, that's very telling. That's what we really think about. But we need to go ahead and look beyond that. So when we look beyond that, what would we look at? Well, we need to consider how a person buys a home. You know, people actually don't buy a home so much based on its price. Rather, they buy a home based on the monthly payment and the affordability of that monthly payment, often on an 80% loan. Okay, so let's consider that. Let's go ahead and take a look at mortgage rates. And what have mortgage rates done? Well, essentially, mortgage rates have fallen for about 40 years. When they reached a peak back there in 1981, they're anemic. They're almost off the chart here. The bottom of this chart is at 2.5% interest rates, but real interest rates are even less than the rate of inflation now. So the payment amount has come down so much because so much less of it goes to interest with these lower mortgage interest rates. Those payments are getting whittled down. But really, we need to consider more in the picture here. It's not just interest rates and capital prices, but it's also inflation. We've certainly seen a good amount of inflation over the past, call it 15 years since the peak of the last housing bubble. In fact, if the peak of the last housing bubble was 15 years ago and we've had 3% inflation, that is about commensurate with the 45% nominal price gain that we've had to take us up to today's prices, if you remember the first chart that I showed you. So therefore, on an inflation-adjusted basis, just looking at that, prices would be about the same. Also, Americans have more income. Oftentimes, they have risen with inflation, offsetting those payments brought down by those low mortgage interest rates. So let's take a look at a very interesting tool here. This is called First American Title Company's Real House Price Index. They're aware of a lot of these factors that I'm talking about, and what this index does is it adjusts house prices with considering what mortgage interest rates are, what inflation is, and what's happening to American incomes. And as you can see here, looking at this house price index, real house prices are down 26.8% since January of 2000. So therefore, from the housing price peak of around 2007, they'll tell you that real house prices are down about 40% when you adjust for these three factors: interest rates, inflation, and income. So really what we're talking about here is the ability of the American consumer buying power adjusted basis. It's a consumer buying power adjusted basis once you consider all these things. And really what that tends into is we're talking about affordability. How affordable is a house for an American? And this chart is really telling. And by the way, these charts often come from FRED. That stands for Federal Reserve Economic Data. So how much of a strain is it on the American homeowner to make their mortgage debt service payments, principal, interest, taxes, and insurance? And that has continued to go down, 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 down for a lot of these reasons that we're talking about: increasing inflation, increasing incomes, and lower mortgage interest rates. So this is a really telling chart. Homes are substantially more affordable when you go ahead and take a look at it this way. Hey, go ahead and put a YouTube like on this video if you would. That helps see that more material like this shows up in your feed. If you like material like this, and I like when you put a like on it because that probably does show the video to more people, so I can reach more people that way. I'd really appreciate the like. Now let's look at this some more. Let's go ahead and pull back and just look at classic supply versus demand factors. Economics 101, and trying to answer this question, are we in a housing bubble or is this price run up sustainable? And one thing that we need to do when we look at demand is look at the fact that the largest generation in American history, even bigger than the baby boomers, is the millennials. There are more than 80 million millennials, depending on the demographer that you're talking to. The age of millennials is age 25 to 40. Well, these are prime household formation years, not necessarily home buying, but it's both home buying and renting. It's really a mix of both of those things, because when you're age 25 to 40, you're getting into that age where you've moved out of the house, especially for some of those younger millennials. So we go ahead and look at the age cohorts in this chart here. You can see that a lot of millennials in their late 20s and early 30s, you can kind of see that bulge there. Okay, that's the bulge. That's where most of the population is in kind of these late 20s, early 30s, people getting out of their parents' house and forming their own home. So you have more and more of basically these household formation generators helping with that demand for housing. Our overall population in the United States isn't increasing that much, a little less than 0.5%, but look at how households are being formed. That's where the necessity and the demand for housing comes into play, and this millennial group is really aging into it. So that's part of demand. We have sustainable demand. We know we've had a lot of bidding wars lately, although I think they have crescendoed and dropped off. Let's take a look at supply. How many homes are actually available at any given time? This is actually a familiar chart if you've been following me for a while, but it is worth following. This is active listing count of single-family homes, townhomes, and condos in the United States, and we're only looking at the last 5 years here. If you look at the period before this, we had even more housing inventory. Again, this is a number of homes on the market. There was a seasonal fluctuation there with those humps each year, but then you can see beginning almost 2 years ago, it just went down, 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 down. It fell nearly off a cliff. It's dipped and come back up out of that trough. But as you can see, there are only about 640,000 active listings in the United States today. And oftentimes we're at double that or even more in recent years. So we still have this dearth of supply with a greater demand, and homes are affordable for more people for those aforementioned factors. There's another component to this, and that is the rate of home building. Economists and construction industry experts and everyone agree we have got to get more homes built, and it's going to take us years to get up out of this trough that I just showed you. That's home building. There's some other factors to consider, some that charts won't show you, and that is the utility of a home. That means how useful is the home to you. A home has had more utility than it had in decades past, because now with more people working at home and more people having the technological ability to work remotely, you might not only live and sleep at home, but you might work at home, and now you might work out at home, and more people are homeschooling their kids and having a greenhouse and just doing all these sorts of things where they're spending more time around the house. So homes have increased usefulness to Americans. It's an increase in utility. And most people borrow for a mortgage loan, and the interesting thing that separates this and what's going on with this recent housing price run-up phenomenon with the previous one about 15 years ago is 15 years ago, you didn't even need an income or assets to qualify for a loan. Mortgage loans were just being given out profligately, ridiculously. Anyone could get a loan. You have strict underwriting standards today. You need to have income, you need to have assets, and you need to have a good credit score. In fact, the median credit score among mortgage borrowers surveyed recently is 786. 786. That's pretty remarkable when the range is 350 to 850. And there's actually been a little credit score inflation too. It's easier to get a higher credit score, but still, if you'd adjust these credit scores to what they were a few years ago, it would probably be in the 770s. So very credit-worthy borrowers, people that have the ability to pay and they don't want to walk away from their good credit score because they have something to lose. In fact, if I were a borrower and I wanted to get a loan from you and just say my credit score were 440, not only does that show I have a bad track record, but that would probably be a bad loan because I have nothing to protect and everything to walk away from, which is exactly what people did about 15 years ago in the housing bubble. They didn't have any credit score to protect, no reputation to protect. So when you consider all this, what is the deal? Are the prospects for a housing bubble, are they none? Are they low? Are they in the middle? Are they high? Or are they certain? Of those five, and you never truly know the future, so you can never say with great certainty yes or no, but I would just say the second of those five gradients. Due to all these reasons, the prospects for a housing bubble are low, and that's due to the nominal price not being that high on an inflation-adjusted basis, the fact that interest rates are low, and the fact that demand exceeds supply. All those factors rolled into one mean the prospects for a housing bubble really are quite low. Hey, go ahead and listen to the Get Rich Education podcast if you'd like to hear more about the housing market, real estate investing, and bringing an abundance mindset to real estate investing. I'm Keith Weinhold. We'll see you in the next video.